Okay, very good. So let's get started. Thank you so much, everyone, for joining us here at the LSE for this evening's event, which is hosted by the Center for Macroeconomics here at the LSE. My name is Ricardo Reus. I'm the A.W. Phillips Professor of Economics here at the LSE, and I am the Director of the Center for Macroeconomics, and I'm very pleased to welcome here today Brunello. Brunello is not necessarily a guest because he's one of our members of our Center for Macroeconomics and a research member, so he's home, but I'll still welcome him because you also need a welcome home sometimes, as many of us know. Brunello is here today to present his book Smart Money. There will be some copies if you want to buy some and have them signed by him at the end. But before that, he's going to present some of the topics in the book and discuss them with us. The way this will be organized is that he will present in themes in initial presentation, and then he'll take questions for myself, and for many of you, I'll open the door so people can ask questions as they wish. Brief introduction: Brunello is a financial economist and a geopolitical strategist. He's a rare person who can really understand the geopolitical balances together with the sound economic theory and institutions, and he has made a very successful living in a good sense of making the world a better place in advising market participants, policymaker institutions, exactly straddling these two fields that are difficult often to bring together. He is the CEO and head of research at Rosa and Rubini Associates, and he's a visiting professor at City University, as well as organizes one of the classes on global macro challenges here at LSE, and also is a visiting professor at Bocconi University in Italy. He worked previously at the Bank of England. He's a member of the Chief Economist Advisory Board of the EIB, and he generally just advises many institutions. Topic of today could not be more relevant, also with what happened with all the excitement of the last 2 days in markets, in terms of both how changes in the digital space are affecting geopolitical equilibrium, and as well in the case of money and digital assets. That is the topic of the book. That is what Brunello will talk about to us today. A few housekeeping for the Twitter users in the audience. The hashtag is hashtag LSECFM. The event is being recorded. Hopefully, or very soon, it will be made available as a podcast, as long as the recording didn't go off, but it will be on the LSE website in a few days. But for now, I'm delighted to hand over to Brunello to present his lecture. Welcome.
Thank you very much. Thank you. Thank you, Ricardo, for the kind introduction, and thank you all for coming here tonight. I'm going to be presenting some of the key findings of my book, Smart Money, that will be available outside. The publisher is here, and I'm actually very glad that it will make it also this evening. The book has been graciously named among the best economic book of 2024 by the Financial Times, and thank God it seems selling well. But you can always sell more. So thank you for coming. Anyway, this is the plan of the things I want to say. There are many of them, admittedly. Hopefully, I can squeeze them in half an hour. But then we'll have plenty of time, I'm sure, for Q&A, both with Ricardo and with the audience. If you do have a burning question, please just raise your hand and I'll answer. So clearly, we start from the basic. What's a CBDC? Not many people knew it. Still, many people don't know. Some of the purposes of CBDCs. Then we get to the core, which is the geopolitical motivations of CBDC. A bit of a spy story to spice up the discussion. We'll see what this means. And then answering one of the key questions, which is whether China would promote de-dollarization by using its CBDC, and eventually big fundamental questions on whether cryptos, including stablecoins, would separate state from money. So big questions for the future. Okay, so let's start. What's a CBDC? Okay, actually, let me ask a question first. How many people know or think to know what a CBDC is? Random, roughly. And we are not talking about, rough definition of CBDC. Okay, so good, good. But still, I would say, if I counted well, still a minority, okay? So, according to the Fed, just to use a definition by major central banks, it's the digital liability of the central bank, widely available to the public, okay? It differs from other forms of electronic money, to be more precise, even more than digital, because it's a liability directly of the Fed and not of the commercial of a commercial bank or another institution. Fed being Bank of England, being European Central Bank, being People's Bank of China, any central bank. Okay. So just to give you a graphic representation of what it is, okay, you got the two typical forms of liabilities of the central bank: coins and banknotes, the money that we have in our wallets, and commercial bank reserves, okay, money that is lent to commercial banks for their operations. Okay? So CBDCs will enter as a third form of liability of the central bank. And while this is physical, coins and banknotes, and reserves are, of course, electronic, you can move them between the central bank and commercial bank electronically. The CBDC would be an electronic, even better, digital liability of the central bank, but directly available to the general public. Okay, so a retail CBDC is something that all of us will eventually have in our phones. Okay. I hope at least this scheme and definition is clear enough. What it is that is going on here? Well, we are moving from the analogic era to the digital era. We used to write letters. Nowadays, who write letters? Not many people. In fact, we write emails. We used to, ring people over landline phones, and nowadays we do video calls with our mobile phones. And CBDCs, and this is the Chinese version you see here. I'm telling you, is written here, ECNY, so digital renminbi, okay, available on your phone, is the digital equivalent of cash. It's like not having it is kind of impossible, because it's impossible that when everything moves into the digital sphere, we remain with such an ancient technology as paper. Okay? So, what are the purposes of CBDCs? Well, actually, this was the subject of many initial discussions, and a report in January 2022 was issued by the House of Lords saying CBDC is just a solution in search of a problem. And that was kind of a leading question, because it was also the answer: yes, they are. And they don't serve any particular purpose. But then, thank God, lots of time has gone. People understood that they actually serve some purposes. We'll see them in a second. And a couple of years later, they wrote a new report where they asked whether they are still a solution in search of a problem. But the point is that both the Bank of England and the Treasury have made massive step towards the adoption of a digital pound. What are the main micro motivations behind CBDCs? Well, in some cases, the efficiency of cash management. For example, the sound dollar in the Bermudas, the Bahamas, you don't want to transport cash among the various islands of a complex country made of many hundreds of islands. Is inefficient, is costly, is dangerous, is subject to piracy, and so on and so forth. If you can do electronically, so much better. There's an efficiency gains in cross-border payments in particular. This is very important, the third one. Responding to the competition of private sector e-money. So whether the central bank does it or not, the private sector is doing it anyway, so you might as well do it. That's important. It will become more and more relevant as we go by. You can do much more targeted policy making, in particular fiscal policy, but not just that. I can return to that, perhaps including Q&A. There's an element of reduction in the informal economy simply because everything is somehow traced or traceable, and therefore less tax evasion, less tax avoidance, and whatever. Financial inclusion, there are in the world 1.7 billion people that are unbanked, okay? So not everybody has a bank account, but virtually everybody, even the peasants in the most remote areas of the world, do have a mobile phone. So if I can put somehow a bank into a mobile phone, well, I've solved the problem of financial inclusion. And eventually, that I think, and that's why it's in red, it comes last, is just to make sure that you put the public safe assets in people's digital wallets. Okay? What does it mean? It means the following. This is effectively a survey made by the Bank of England. Okay? Let's say we have moved in a sort of digital asset space. Okay? And there's some form of heightened volatility. Okay? So you see here an increase in the volatility that has reached 99th percentile. In case of extreme volatility in the digital asset space, people would want to access CBDC. What does it mean? It means simply that you might be playing with all your currencies of all sorts, okay, crypto, stable coins, but even traditional. And if something goes terribly wrong, the same way you would go to your bank branch and try to withdraw cash, the old-fashioned bank run, right? You can do from your phone, and you will move everything or part of it in something that is public and safe. Okay, the purpose of a CBDC. So if you think in these terms, you can think of CBDCs as the foundation of a digital asset space by which you have the CBDC at the very bottom of it, not necessarily in terms of size, but in terms of foundation of trust. And then on top of that, you put the market solutions, so stablecoins and crypto. So what we have seen, especially after Trump's latest executive orders, is that the Americans are following the market-based solution of promoting cryptos and stablecoins, and the Europeans and the Chinese are following much more a state-based approach of promoting CBDCs. It's something like, we'll go back to that. The Americans are saying, well, you know what? Here is a new frontier. There's a new space that needs to be conquered. Off you go, guys. Go and get as much as you can. Clearly, somebody will win, somebody will lose. There will be winners and losers. Eventually, there will be crisis and so on and so forth. But we'll think about regulation later, right? Most likely after a crash, right? The steep of the US. In Europe and China, we are thinking different terms. We say, okay, let's make sure that we have a safe place, okay? Financial stability is ensured. And then, after the right parameters have been set, and there's enough safety in the system, well, then, hopefully, a market will develop. But eventually, you know, in equilibrium, I think, the three of them will coexist because they simply exert very different functions. Okay? So these are the microeconomic reasons behind the issuance of CBDC. But then, there's vast literature on that, and that's why I didn't think it was worth writing an entire book on that. On where there was no literature was the geopolitics of CBDCs. Why? From a geopolitical perspective, they make sense, okay? And this is what the book is mostly about and what I'm going to discuss. Well, if you think for a second about the Europeans, they really see the digital euro as a means to achieving what they call strategic autonomy. From this map here, you can tell that there's not a single credit card scheme that covers the entire Eurozone, which is a bit strange, if you want, especially after so many years of establishing the euro. which is now 25 years old, so a quarter of a century. You have several schemes, but none of them is pan-European. The only pan-European ones are offered by the Americans. So a key motivations for the Europeans to establish a CBDC, let's call it a digital euro, it's to kick out the American credit card system. As simple as that. Initially, I didn't think it was a strong motivation, but eventually, in reality, to speak with them, it's top of the agenda. And in any case, if you want to establish some sort of strategic autonomy compared to the Americans and the Chinese, you need to have your sovereign currency, including in the digital space. Okay? Otherwise, you would simply get colonized by the bigger powers around. In China, there are two main motivations for introducing CBDCs. I would say a domestic one and international one. Right? The domestic one is regaining control over the information that flows in the payment system. That was lost to private, let's say, semi-private sector solutions such as Alipay, WeChat, and so on. Right? As a former central banker, I can tell you, we don't like not to know what's going on in your economy. Okay? In the international space, this is to increase the internationalization of the RMB. I'll go back to that in a second. So let's focus just for a second on the first one, the domestic one. This is so true that even Chinese authors have talked about surveillance state. So effectively, the government that already controls a big part of the economy, one way or the other, directly or indirectly, by looking into in every transaction you make with your phone, can effectively have access to everything you do, and to some extent, this is used for what they call social credit score, right? And this, rates how good you are as a citizen, whether you are eligible for credits and other forms of transactions. Okay, this is true in, let's say, authoritarian spaces, but it's also true in capitalist democracies. This is what Shoshana Zuboff from Harvard has written a couple of years ago, The Age of Surveillance Capitalism. So, in reality, it really doesn't matter whether you live in a democracy, whether you live in a autocracy, whether you have a centralized economy, whether you have a capitalist economy. Eventually, there's a huge tendency in increasing surveillance of whatever you do. It's just different. It's only different the subject that organize this kind of surveillance. Okay. Now, this is the real core. The Chinese thought through quite deeply about this because the sequence is very revealing. In 2012, Xi Jinping gets elected to various positions. Already in 2013, he speaks about the BRI. He announced the belt in September and the road, the maritime road, in October. In 2014 already, he launches the CBDC project. Okay? Imagine, 2014, 11 years ago, almost. Okay? While in this side of the world, we are still discussing whether this is a solution in search of a problem, whether privacy is at risk of this and that, right? They started 10 years ago, so they have huge head start, and is increasing. In 2015, they launched the digital Silk Road. So what is it that I'm talking about? So that's the basis, okay? BRI, okay? Belt and Road Initiative. These are all signatory countries around the world. We are talking about around 80% of the countries in the world in terms of numbers, 75% of the world population, and 50% of the world GDP. Okay, so it's not a small initiative. Okay, a sister project is the Digital Silk Road. Okay, by which we mean the following: in the traditional Belt and Road Initiative, China goes around the world and builds the physical infrastructure of countries. Okay, ports, airports, railways, and you name it. Okay. In the Digital Silk Road Initiative, they do anything that has to do with digital infrastructure, whether it's 5G networks, whether it's fintech solution, government, e-commerce, and you name it. And those are involved in this in these projects are the usual suspects: Alipay, WeChat Pay, Huawei, ZTE, the usual big half-state company, let's call it that way. Okay? As part of this project, but not necessarily related to that, but it's part of the more completed scheme that they have in mind, China has its own payment, cross-border payment system called CIPS, which means cross-border international payment system, which, as you can see, is everywhere, including in the US, including in Europe, but is particularly strong along the countries of the Belt and Road Initiative. Okay? And we'll go back to that in a second. Now, what is it that China does when they go around? Effectively, they offer everything. They make offers that somebody could say cannot be refused. Okay? So they build physical infrastructure for you, they build the digital infrastructure for you. You might say, you are the head of government or the head of state of one of those countries. Well, I don't have the money to pay for all this. Don't worry, I'll lend you the money. So they give you the money, they give you loans. Okay? So you got effectively everything. Now, the point is that those loans, of course, are collateralized by this infrastructure that they build. The covenants are very stringent, most of the time unknown. Okay? And you might end up being a bit in trouble. You might have a sort of year-end debt trap. We have seen that in a few countries, including Sri Lanka recently. Okay? And so, what is it that China is doing? Well, China is building the rails on which future payment systems will run. Okay? So, it really doesn't matter too much what is the train that runs over that, which means the digital product that goes on them, whether it's crypto, whether it's CBDC, whether it's stable coins, whether it's tokenized deposit, whether it's, you name it, right? Anything can run. Because what really matters is who owns the rails. Because those who own the rails then decide what runs on it. Okay? And so this is what China is doing. And this is the big point. The most people on this side of the equation, let's call it that way, the West is not getting. Once China will have been built these rails, once China will have built the digital and physical infrastructure for these things to operate, then there's no really point in being second. Because no country will ever dismantle this infrastructure just to allow other countries to build their own. It's just going to be a waste of money, time, and resources. Okay? Now, let's start looking at this chart. So, this is a chart showing countries in the BRI, okay, in the BRICS, because some countries don't belong to one but belong to the other, and also countries in which there's experimentation about CBDCs. Okay, it's like the entire, I don't know how you call it, Eastern Hemisphere, but depending how you look at the world, right? But it's pretty clear where China is not and who's not involved. Okay? First, look at this map start coinciding quite closely to other maps, including this one of the Shanghai Cooperation Organization, which is a security, let's call it military organization, okay? Which has China and Russia as the key founders, if you want, okay? And over time, of course, they have increased. And as you can see, and if you just think about the BRICS, which has recently expanded, right? You remember that map that goes from here to there, right? Okay. Even if you focus only on the BRICS, it seems like you start having a kind of rivalry between BRICS and G7. But in all honesty, this G7 resembles very, very closely to NATO countries. And these countries here really start resembling more and more not just an economic cooperation organization, but actually a security cooperation organization. Okay? So what I'm saying is that China is effectively building a new parts of the world that can totally disentangle at some point from this part of the world, right, where we're living, okay, which will remain perfectly viable, but confined, okay? So separation between the two sides. Okay? Such is that a few years ago, Graham Allison, a scholar from Harvard, has written this book, Are the US and China Destined for War? Right? Because that seems inevitable. Once you start building these blocks, it seems like eventually you're going to head to a war. So he examined 16 episodes in which an incumbent power was challenged by a rising power, and in 12 out of these 16 occasions, a war emerged between us, a hot war. Okay? Now, we don't know whether this will end up being a hot war between US and China, meaning a proper military exchange, okay? Potentially over Taiwan or who knows where else. But what we know for sure is that in the meantime, for sure, we have a Cold War between US and China. Now, this Cold War has, in my opinion, three main legs. Okay, one is the visible trade war, the one we discuss every day in newspapers, with tariffs and all that kind of stuff. Great. The other one, which is several orders of magnitudes bigger, which is the tech war between US and China, that is ongoing. Now, mind you, these days we can also read about these things, but this has been going on for a very long time, almost unnoticed. Okay? And then the disruption of the global supply chains, which to some extent are related to both, in particular with the trade war. Now, if we focus on the tech war only, right, I think there are 8 dimensions there. Whether it's AI, big data, quantum computing, chip war, space, race, you name it. And one of these components is CBDC itself. Okay, so if you want to read from a pure geopolitical perspective, you can read the CBDC as just one another battleground of the tech war between US and China. And then you start thinking about all the tech, whether it's crypto, stable coins, and regulation, and this and that. But it's a totally different approach. Okay? So that's kind of the key tenet of the book. Now, how this thing unfolded? Well, on 4th of February 2022, Xi Jinping and Putin met in the sidelines of the Beijing Winter Olympics. Okay? And they signed the Pact of Limitless Cooperation between Russia and China, where they effectively say we'll cooperate on everything, especially on security, especially military, and so on and so forth. By the way, they are already in the Shanghai Cooperation Organization, right? Okay. Is it said to be that in that occasion, okay, Xi Jinping gave Putin green light to invade Ukraine? Okay. In the same event, okay, the Chinese CBDC was launched. So this was the card by which you can pay at the Olympic Village in Beijing. As you can see, you could only pay cash, but in a very limited extent, Visa, okay? No MasterCard, no much competition there. Or ECNY, okay? With the digital yuan. These were the only 3 ways you could actually pay in the Olympic Village. Now, these 2 things seem uncorrelated, but they are not, okay? Why? Because what Putin knew was that after that move, a massive avalanche of sanctions will hit the Russian economy, including being kicked out of SWIFT. But guess what? Nothing happened. Why? Because the day after Russia was kicked out of SWIFT, well, they used SIPs. Okay? So the effects for the Russian economy was very, very limited. They already had an alternative system. They also had the possibility of using cryptos or any other form of digital assets. Was this known to the authorities? Of course. Financial regulation authorities on sanctions and the crypto asset sector. So all these things have been known. It's not that they were new. Okay? They even ask here, China's digital yuan, so the CBDC, right, may Russia bypass SWIFT ban, but will it? Yes, it will. And in fact, it did. Okay? So I'm not saying anything unknown. It's just that possibly unnoticed. Okay. Were the US asleep at the wheel? Not really. Okay. Of course, they monitored the situation. They knew what went on. Okay. And on the 9th of March 2022, so literally just a couple of weeks after Russia's invasion of Ukraine, President Biden issued an executive order on the responsible development of digital assets, including the development of the CBDC, and so on and so forth. Why? You may think, well, a president, an American president, seeing the crumbling of the post-World War II geopolitical equilibrium in Europe, right, must be very busy in those days, right? Sending weapons and this and that. And instead he signs an executive order on digital assets. Isn't it crazy? No. It's absolutely spot on, because he knew that the key component of that war would be fought on these grounds. Okay? Now, this has just been revoked by the executive order of Donald Trump, signed last week. Revocation of the executive order 14067 and Department of Treasury framework of July 7, blah, 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 executive order March 9, 2022, this one, right, is hereby revoked. So that executive order doesn't exist anymore. Does it mean that Russia and China is now more free space to evade sanctions and all the rest of it? I leave the question there, right? You name it. Well, on the back of this, many other central banks have started developing CBDCs. Is it said that what, maybe 80% of the, or even more than that, 90% of the global central banks are experimenting CBDCs? Yes, that's the case. Okay? You see the various stages of development. I'm going towards the end. Will China CBDC promote de-dollarization? Okay, big question. People talk about, the RMB will substitute the dollar. No, it will not. Okay, that is not even the aim. The aim is making sure that the dollar is confined to the sphere of the geopolitical sphere of influence of the US, and everywhere else, then you can use the RMB. Okay. Now, if you look at the use of dollar as a reserve currency, has been declining the last 10 plus years. Okay, from 60%, 66% to just below 60%. Not a massive decline, but still a decline. Okay, if you look what happened in the other currency spaces, well, you can tell that the Chinese have actually grown a bit. Okay. Quite substantially over the last few years, okay? Although their quota remains relatively limited. But here is the thing, right? What are the key components of the dollar dominance in the world? Well, a current account deficit by the US, okay? So importing from all over the world, by issuing a deficit, the very deficit that Trump wants to reduce with the tariffs, right? Making sure that dollars go around the world to pay for everything, and then ensuring that this can be converted into any other currency freely at any point in time, so with an open capital account. So that's the recipe of dollar domination. So is China following the same route? Not at all, okay? They don't want to have a current account deficit. It's still an export-led economy. They don't want to have an open capital account because otherwise money will flee, okay? It would be capital flows. So they don't want either of those. So how can they establish the CBDC, the RMB, as a credible alternative to the dollar? Well, through technology, okay? So they have an alternative payment system. They will build infrastructure on which anything else will run, okay? And then people will almost naturally use CBDC. Is the US scared of this development? Yes, it is. Donald Trump, who's been absolutely fabulous, in my opinion, in helping us selling books, I think, right? The book opens with a quote from Donald Trump saying, under my watch, you will never have a CBDC in the US. And in fact, he signed an executive order on that. And that's the opening sentence. As soon as he said that, January last year, we said, oh, we found our opening sentence, okay? And then he continues, and he says, if the BRICS, BRICS country, in his opinion, Spain is part of it, but let's close this parenthesis, okay? If BRICS country adopt their own currency, okay, they will face, the mighty power of the dollar because they will impose at least 100% tariffs. That's not a sign of strength. That is a sign of weakness. It means he fears that they might do that. Now, what is a BRICS currency? That's the funny thing. Now, as a former central banker, I can tell you, there's no way a BRICS currency in the traditional sense can be established. Where would you put the central bank, right? What economies are behind this currency? You have export-led economy, you have importing economies, you have deficit economies, you have surplus economies. It's impossible, right? We saw with the euro how complicated it is converging, okay? In a proximity, imagine something from China, Brazil, South Africa, not Spain, okay? So, it doesn't really work. The way it could work, though, is this image of the train I showed you before. It's like China builds the rails, and then the train is just, if you want, a basket of currencies from various other countries. That can work. That is what you can call a BRICS currency, which is a Chinese currency in disguise. It's not a BRICS currency. Okay? Hence, the image of the book and the digital de-dollarization. Okay? So the dollar doesn't disappear in the traditional sense because with 60% of the transaction is still the dominant currency in the world. But through technology, it can actually make. Let me finish with this question. Okay? Will crypto, including stablecoins, separate state from the money? Well, as I was saying before, in this digital asset space, okay, you have three elements. And, in terms of volatility, from the more volatile crypto to the less volatile CBDCs. But then you have market-based solution, more crypto and stablecoins, and state-based solution, more CBDCs. And this is where the US is, and this is where the EU and China are. Eventually, EU and China will realize that without liberalizing a bit the market will never take off. People, too much regulation, people are not, have no incentive. The US, vice versa, will have its usual far west, right? In which you don't know who's the criminal, who's the sheriff, who writes the law, who puts people in prison. It doesn't matter, right? Eventually, they get a crash, as they always do. There might be another crypto winter. As crypto specialists and fanatics tell you there will be, it's not me speaking, it's them, and hope there will be to get rid of, some of the frauds and scams and all the rest of it, of which the system is filled with. And as a result, they realize that without the CBDC that provides the foundation of trust, the system doesn't actually work. Why all this is happening? Well, simply because we are moving from the, as I was saying, the analogic space to the digital space. We need a native digital solution, right? We are moving in the world of NFTs, whereby you start having two different things. A painting on a wall and an image of the same painting divided in NFTs and start going around the world, and then having two parallel markets, and eventually somebody will have to figure out how to reconcile these two things. So massive legal implications. This is because we have moved from Web 1, read-only, Web 2, read and write, okay, blogs and social media and so on, to Web 3, where you exchange value, such as money, digital money, okay, and digital identity as part of the key component. You're not going to buy unless you know who you are buying from. So, big developments here, of course, are whether Trump will eventually build its own crypto Bitcoin reserve, okay, And as a former central banker, what does it even mean having a strategic reserve in bitcoins? I mean, intellectually, it's a very hard question to answer. Okay, could make some sense in this environment, in our traditional environment, it wouldn't make sense. Okay, but here, and this is how I finish, I invite you to think about the next big thing. Okay, so money not issued by the state, okay, but issued by not just private sector financial corporation. We know it, okay? JP Morgan, big banks, okay, they issue their own tokenized deposits. That's simple evolution. The revolution is money issued by non-financial corporations, okay? Being Starbucks, being Amazon, being Google, being you name it. I like the Avios point because that's how they already labeled it, okay? Avios, our reward currency, okay? So eventually, what prevents you from using Avios points to buy your groceries at Sainsbury's, for example, or Tesco, whatever you want? It's effectively just regulation. It's definitely not technical. It's just somehow forbidden. But the day that regulation changes, that currency will be there. Do you need a state to back this? No, you don't. Okay. And so, who's gonna issue these currencies? Well, again, these will be the big multinational, non-financial corporations. And at that point, the role of the state is very diminished. Who understood that? Is Paul Ryan. Paul Ryan, former Speaker of the House, traditional grand old party man, so not the populist side of Trump, is very mainstream. He said, with this article on Project Syndicate, stable coins are the way to defend the USD global status because this is where we have a competitive advantage. Okay, so again, crypto, stablecoin is where the US will respond, how the US will respond to the Chinese challenge on the state-backed CBDC. Okay, and with this, I think I can finish here the initial part of the presentation. Thank you.
Great, so that was a great introduction. Before I open to the floor, let me ask a few questions to Brunello.
Sure.
One thing that you did mention now towards the end, but not too much, and I wanted you to clarify how you see it,
Yes.
is the role of banks in this new world.
Yes.
Both in terms of what role they will play, you already mentioned that they could be issuing these tokenized deposits.
Yes.
This will work.
Yeah.
One. But two, also on the differences as you see on the evolution across the different regions. I mean, as you noticed in the EU, well, there's a big emphasis on creating a banking union. Of course, CBDC may be a tool towards it or not, in a way that in the US there isn't, or there is already now some banking union. Tell us a little bit about how you see the role of the banking sector. And by that I mean the commercial banking sector within this world, not just in general with the CBDCs, but also the differences across the different regions.
Absolutely, thank you. It's a great question because, you know, I cannot say everything because this is how I plan to make money in the next few years, right? So, because banks will have to change significantly. They will have to completely adapt the business models, and I will help them to do that, right? Under a nice fee. Now, to answer the question without jeopardizing the profitability of my company, the point is the following. Banks really need to understand that the world is changing, whether they like it or not. These things are happening whether they like it or not. If anything, the Bitcoin was invented as a result of the global financial crisis. People didn't trust banks at all. They wanted something that didn't involve the banks. And even the central banks, they, at the time, you know better than me, were considered the saviors of the world. Okay? So banks will have to change massively. And actually, to some extent, marry the fintech revolution. I actually have a small slide I can show you, which is the following, okay? Cooperation banks, fintech. So if banks think they can simply fight the fintech without cooperating with them, they're going to lose. Okay? Fintech can already provide so many solutions at a fraction of the cost, at an exponent of the speed. So the best thing is embracing them, okay, and reach that kind of conclusion, okay, by which banks will continue to do the one thing that they do best, which is lending. And by the way, as you know, banks are doing less and less lending, which is not a good development. They do many other things, asset management and all other stuff, but not lending necessarily. And that's actually the things they do best. But all the other things, for example, payment systems, no, forget about it. There will be other solutions, much cheaper, much faster, and so on. Okay? Region by regions, well, the American banks are so much better positioned. Okay? JP Morgan has started working on his stablecoin, tokenized deposit, call it as you want, with the Onyx project already years ago. Is very well established. Other banks are doing the same. And I think, given the size at global level, they are set to dominate. European banks have quite a bit of work to do. Because, first of all, there's not even a banking union on the even simplest element, which is the common deposit insurance scheme, that, as you know, has never been established. Surprisingly, because the Germans don't trust the Italians don't trust the Germans. So nobody trusts anybody, the system doesn't work. So, UniCredit has tried to acquire Commerce Bank, as you know, has been stopped by the government. So, just to give you an example. So, I think the Europeans have to do 2, 3, 4 steps before reaching any meaningful level of cooperation. The Central Bank has done a great job, in my opinion, in forcing the digital euro project. Banks didn't want that. Banks were scared of that. They lobbied heavily against that. They feared disintermediation. They fear deposit fleeing from commercial banks to the central bank. All this can be easily resolved, right? Without a digital euro, you really tell me, in this world in which Trump is going, the speed is going, and is doing the things he's doing, and crypto is pushed to a massive extent, and stablecoins even more so, how can European banks survive if you don't have a strong CBDC? So I think that's the way I would put it. And then there's the UK, which is a bit of a special case because it's always been between Eurozone and US, and now God knows where is this special relationship going.
Let me ask you a second question, which is something you mentioned, which is, and partly with the technical progress we've had on the artificial intelligence in the last 48 hours, to what extent, so far you've pretty much, another thing you didn't mention much, I don't think it's because of future opportunities, is the technical side of it, meaning what are the technical barriers for these things to start? Are they entirely overcome? And so it's really, the world could tomorrow start indeed with the EREM NIMBY very quickly if we solve all the coordination problems, let's say, that jump-started? Or are there still technical barriers and innovations that are needed in algorithms or others to do it? Can you give us just a little bit of flavor of what
Sure.
the technical constraint is?
No, there are technical difficulties. And technical doesn't mean just technological,
Sure.
right?
Absolutely.
Legal problems are as important as technological. So in fact, if anything, the technological solution is almost the easier bit. Is the legal framework that is massively complicated. Also because we didn't mention, this is a technical, two technical words I would say. One is interoperability. Okay, so the fact that unless this instrument can speak to one another, you risk creating more fragmentation in the global financial system than reducing it, which was in theory the aim, right? Because if you want to have easier, cheaper cross-border payments, and eventually you fragment the system even more because the systems are not interoperable, and this is a technical difficulty, yeah? Well, then you haven't achieved your goal. The other technical aspect of it is programmability. Okay? Now, programmability means that, and hence the name of the book, Smart Money, is because what you put in your currency is also a smart contract, which means money becomes conditional. Okay? It only appears, if you want, it moves from one side to the other side. It is destroyed on one side while at the same time is created on the other side. Okay? At the realization of certain condition written in a contract, a digital contract, so smart contract. Okay? That's the way money can be used. And perhaps that's the best way I can describe it. Okay? So, you know, CBDCs are like the platform offered by the iPhone. Okay? When the iPhone was created, there were only 12 applications there, 12 apps. Okay? And people even thought, why on earth do I need that? Okay? You had the Nokia, the best company in the world, and the phones were amazing. Work forever, indestructible, long batteries. What else do you want, right? In reality, then the iPhone came, and nobody uses Nokia anymore. Why? Because they offer the possibility to the private sector of building, of offering the apps in this platform that is being offered by the CBDCs. And in some cases, such as in Europe, freely. So this is the central bank that is doing all the work, and people don't even see. And actually, if you look at the compensation system, eventually it's cheaper than the current one. Now, I don't know what apps will be developed thanks to the programmability of money. I really don't know. As people didn't know when the iPhone was first issued, how many apps would be created. And today, nobody goes out without a phone. It's even more important than anything else, right? Because everything is in there. So that's I would say, what the technical aspect of it is.
Very good. Third and final question, and I'll open up. Much more on a monetary policy perspective and how do we think about this money in this way. So the digital euro, the ECB has announced that at least for now,
yes,
there will be a strict limit in the balance that I can have of digital
yes.
euros. And two, they will pay no interest.
Mm-hmm.
Of course, that puts immediately a constraint in terms of what we think of the ability of a central bank to use monetary policy to affect interest rates and liquidity in the economy, because the central bank, the ECB has said, I cannot print money in the sense of increasing your balance or the limits on the balance, nor can I move around the interest rate that I pay on yours. Do you think that those were good, bad ideas, those limits? Do you think that they will survive very long, or they're just a temporary case? How do you think about the tying of the hands that the ECB did, why it did it, and whether it was just a bad step or a good step, or a needed step maybe?
Yeah, thank you. So first and foremost, it was the result of the intense lobbying of banks. They feared disintermediation first and foremost. They feared the deposit will fly from commercial banks to the central bank, hence by imposing strict limits, 3,000 euros, this is severely constrained and diminished. Then you need to make it attractive or less attractive. And so the way you make it attractive, of course, is by offering a positive interest rates on the balances, clearly, and make it programmable. And on both accounts, the ECB said, no, it's not going to be programmable to begin with. It's not going to have a positive interest rate. Exactly to make sure that commercial banks are not displaced. On the other end, these parameters are easily changeable. You can always say, oh, you know what, the adoption of the digital euro is very low. Oh, let me offer a 0.1% positive interest rate. Oh, by the way, yeah, it wasn't programmable to begin with, but oh, let me push the switch. Now it's programmable, right? And then you can put insurance, contracts, whatever you want, okay? Reward system, you name it. So I think it was just a very prudent way just to reassure banks that nothing will go wrong with them. See how it goes. If it's a smooth introduction, nothing will change. If it's a bumpy introduction, They might switch some of these buttons at some point. If it's a super successful introduction, they might introduce further limits, making sure that people are still using the banking system one way or the other. And by the way, the system we are talking about is this one, okay? Is a two-tier system by which the liability is of the central bank, but the wallets are issued by the commercial banks, okay? Central banks don't want to become commercial banks, and they even can't, okay? They don't want to manage in a country like this 65 million accounts. That's not what they do. They don't care, right? Or let alone check every transaction you do, as some of these very skeptics of privacy and so on would say. No, it's nowhere near what the central bank wants to do. The central bank wants to do, for the reasons I discussed before, they don't want to control the wallets. Commercial banks will, in exchange for what? Because commercial banks will do KYC, know your customer, anti-money laundering, counter terrorism financing, all that kind of stuff. It's very expensive operations. In exchange, first of all, they give them a platform to build the apps, so to speak, so off you go. Secondly, they can actually say, well, now banks, you can issue your own digital currency, and it will be in the form of stable coin or tokenized deposit. Now, the BIS says, let's be careful with this step, because if every commercial bank issue its own currency, we risk returning to the era of free banking, when every commercial bank issue its own bank notes, right? Notes issued by banks, and most of the time they overissued, and then you have the banking crisis, which eventually led to the creation of the central bank as the monopolist issuer of money, because otherwise you risk having this financial instability episodes every now and then, and history is full of them, right? And they've been reduced since central banks have taken the monopoly, right? So the BIS is very keen on making sure we never end up there. However, he's about striking the right balance between opening the market, allowing private sector operators to function, and making sure the financial stability is preserved. And so, who better than central bank can strike this balance, right? So
Very good. On that note, let me open up to the floor. So please put your hand up. The only thing is, when you ask your question, just say your name and who you are. It helps a lot when you're here. And be brief. And please put your hand up, and I'll call up the people.
we got,
So I have one there, please.
okay,
Shall I start?
why not?
Please do.
Thank you, Brunello, for this fantastic lecture tonight. I have a couple of... Great. Can you hear me?
Yes, yes.
Okay, thank you, Professor Brunello, for this such an interesting lecture tonight. I have a couple of questions, if I may.
Yes.
The first one is, you saw this sort of new Cold War between US and China in three legs. May we add another fourth leg, which is health? Yesterday, CIA told us what some of us knew since the beginning. COVID was created in a lab. There was no BAT, no night market whatsoever. Second question is, in the past 3 years, Europe was totally focused and I would say obsessed with Mr. Vladimir Putin, the most evil person on earth. Is instead Putin a sort of a proxy of Mr. Xi Jinping, and is it Russia, not the real enemy, but maybe the real enemy for the Western world, whatever it means? Is it China?
Thank you. Health, for sure, is one of the many dimensions. You're right. We have been speaking about this lab forever. I think everybody knew that between the wet market in Wuhan and the coronavirus lab in Wuhan, one of the two was more likely to be the origin of the virus. Okay? I don't think it was intentional. I think they simply made a mistake. They didn't think coronavirus could become airborne that quickly. Initially, they weren't. Coronavirus has been around for centuries, of course. And if you think about SARS, you remember that. That was not airborne. You needed to touch, for example, the button of the elevator as it happened in Hong Kong at that time. Okay, so it became airborne much faster than they expected, went out of control. If it was intentional, they would have had the vaccine before everybody else, right? The antidote, and they didn't have, and they were more reluctant to use it. So I think it was a mistake, bad mistake. We all suffer from it. Nothing terribly new. On the second one, yeah, I mean, that's exactly the point. Putin will never have invaded Ukraine without the blessing of China. We know that. The only reason why Putin would stop if it's China told them to stop rather than Trump. Is Xi Jinping happy that Putin is bothering the West in Ukraine? Of course it does. Under Obama, the US pivoted or wanted to pivot towards Asia, we remember that, towards the Pacific, leave Europe alone for a period, even the Middle East to some extent, and focus on China, the big strategic rival. What best for China is having NATO and the US and others engage in yet another war in Europe that only bothers the Europeans and the Americans. Yes, so it's perfectly legitimate. And all these things, of course, are not mechanic. It's not the two guys speak and agree and sign contract. It doesn't work like this. They know their interests are aligned, okay? And they move independently to some extent or in coordination in some occasions. But it's a war. It's still a war, even if it's a Cold War. And Ukraine, of course, is not a Cold War. It's still a war. And so, unfortunately, the consequences are felt by everybody. Thank you. Another.
Very good. Sure, yes, the gentleman in the red jacket. The microphone's coming to you. Thank you.
Hi, sorry. Ashish Goyal, I'm a global macro investor. Thank you so much for this talk. Two quick questions. One, the Belt and Road Initiative that you said, the expansion of that initiative has slowed down quite dramatically in the last few years.
Yeah.
And a lot of countries are seeing what the kind of contingencies and the contracts that they've signed are heavily favored in terms of China. Towards China. So how do you think when they put these rails in place, these countries will adopt to that system so easily? I understand Russia has done that well because obviously Russia was thrown out of the SWIFT system and the payment system. But would you get the others to so easily adapt to this? And then, interlaced with the whole big state surveillance, does everybody want China to be able to survey, keep an eye out what everybody's doing? So that's one. Secondly, what is the role of India in this whole thing? Because as you know, India has been playing a really nice balancing act between the US and China, frenemies and new friends, whatever you want to call them. How do you see that coming about? Because I don't see the BRICS, even the expanded BRICS, having any success if India, Saudi Arabia, etc. don't join the whole thing. And honestly, a Chinese renminbi-led payment system, I would be shocked if India joins that tomorrow. So these two questions, I would love to hear your views. And thank you again for this fantastic talk.
Oh, thank you. So, yes, the expansion has decreased, but simply because you're reaching the maximum countries you can actually sign up, right? It is already around 80% and all these other statistics I showed, and then you need to go much deeper in the spheres of influence of the West, let's call it that way, to have new signatories, and it's not going to happen. Italy, for example, a G7 country, sign up for the BRI under the Conte I government when Lega and Five Star were in government, and that caused clearly lots of upset in DC because they thought, hey guys, do you realize what you're doing here? I mean, you're part of an alliance, you cannot jump on the other one. And Turkey, by asking to join BRICS, for example, is already, you know, walking a very complicated, you know, balancing act, if you want. But the point is, once you make those, as I called them before, comprehensive offers, once you offer the entire package, it becomes quite attractive to take it. And the point is, most of these deals are not made among democratic countries with democratic scrutiny. Here we are talking, and there's a fantastic book that I quoted, I would say 3 or 4 times in my own book, that describes how much easier it is for China to have autocracies signing up for the BRI because they don't need to go through parliament and stuff like that. It's just an agreement between 2 presidents. And of course, you can imagine the level of, you know, corruption and that goes on, you know. Don't even need to mention that. So once the country is signed up and is in the hands of the entire offer, let's put it that way, within the entire offer, then is somehow even convenient just to finish the job rather than buying bits and pieces of the system from other, let's call it that way, suppliers. And the point is, once the infrastructure has been built, it's not going to be dismantled simply because Europeans go there and say, you should adopt the digital euro because it comes with the democratic values, it comes with liberal values. Yeah, that stuff counts nothing. Or even the US, they go there and say, no, you should put the digital dollar there because, or any other form of dollars there because, you know, otherwise I impose 100% tariffs on this. I mean, people are tired of this kind of bullying, and the more you go in that direction, the more people move away from the dollar. That's one of the reasons there is this ongoing de-dollarization. The Chinese are responding with the weaponization of their currency, digital currency, in the same way the dollar has been weaponized by the US in so many respects. India is a very interesting case, I would say. India, as you said, is historically the leader of the non-aligned countries. And definitely they would be extremely reluctant to be lumped up with, you know, Russia, China, Brazil, and others in anything that can resemble a BRICS currency. But exactly for this reason, they are actually developing the 3 new technologies there: a new payment system, the UPI, a retail CBDC, and a wholesale CBDC. And if you speak with government, that's as I've done, is very keen on having the 3 of them. And he says that each of them responds to different demands. And so when people say, why do I need a CBDC if you have already a new payment system? Why do you need a wholesale CBDC if you have a retail CBDC? It will tell you exactly why you need the 3 of them. But this is to maintain the level of what I called before strategic autonomy of India for as long as possible, I would say.
Very good. We have time for one final question I want to ask it. So the lady over there in the middle.
Maybe two also, that guy.
If you make it very short, because we're already over time.
There's another one here.
Oh, you can find them here at the end. So let me just
that's
get
true.
the lady and then. Thank you.
The lady and then outside for the book.
Hi,
Buying and
professors.
signing.
All right, got it. Hi, professors. Thank you so much for this lecture. I'm just a humble undergrad, so please forgive me my rudimentary question. But you mostly talked about the global south, in a sense.
Yes.
The way it got kind of swept up with these offers that it couldn't refuse from China and its ability to establish the BRI and its rail system. As someone who is from India and a developing nation, what would you suggest that developing countries' economies do? Because they might eventually get embroiled in a war that they didn't sign up for if it were to culminate in something that is undesirable for everyone, I think.
Thank you very much. Excellent question. Let me answer this way. So in this world that is polarizing, and is polarizing on all domains, I try to explain that in trade, in tech, in supply chains, and so on, okay? You're going to have main players, the US and China. This is absolutely clear. This is going to be the dominant theme for the next few decades. During all our lives, this will be the dominant theme. Now, in this polarized world, there are some regions, let's put it that way, they are somehow already taken from each side, right? For the US is Europe. And actually, what Trump is doing with the Europeans, it goes against their own interests of making sure the Europeans are on board. But, you know, unless there are some dramatic shifts that I don't see, I think the US and Europe will stick together, and so is Australia, New Zealand, the Five Eyes, call it as you want, right? So the West, the way we, and even Japan to a very large extent. On the other side, of course, China can almost take for granted Southeast Asia and a number of satellite countries in the region. They are simply too small to be able to escape that, okay? So what are the regions that are effectively up for grab? There are 4 of them, I think: Latin America, Africa, Eastern Europe, and the Middle East. And in each of them, there will be potentially proxy wars between US and China, the same way there were proxy wars during Cold War I between the US and Soviet Union. And actually, in each of them, you already started to see not cold wars, but hot wars. In Eastern Europe, you have seen what happened in Ukraine. That's just an example, but it's not the only one. We have seen what happened with the elections in Georgia and in Romania recently. You have seen what is happening in Eastern Germany with the rise of the AfD and so on and so forth. So, you know, it's a movement. In Africa, you had what we call the coup epidemic. All the countries in the Sahel and sub-Saharan Africa have been affected by coup that have effectively been promoted by the Russians. In the Middle East, do I need to tell you about the wars in the Middle East? Yes, it's always been there, but has definitely got worse in recent months. And even in Latin America, you got lots of instability there. You saw with Venezuela invading Guyana and so on and so forth. So, you know, in all these regions that are potential places for proxy wars, unfortunately, I foresee lots of instability in coming years. What can they do? To some extent, it's easier if they pick one side or the other early on. Okay? Only India today can still afford to be in the middle because is the country with the largest population in the world, the fastest growing economy in the world, technologically advanced, with plenty of potential for the future. So far they can say, yeah, I can be friendly with China, yeah, I can be friendly with the US. Not forever though, and between the two, maybe India's choosing, I think, I might be wrong, the US. How do I say that? Look at the space race. India is on the side of the US. And you don't share these military secrets with the country that you eventually see as your strategic rival. So, but for the time being, I think it sits in the middle. But only India can afford that. The others, I think, will have to succumb and choose one or the other. The sooner the better, because if they don't choose, they may become the theater of a proxy conflict as it has happened in the past.
Very good, ladies and gentlemen. Thank you so much for joining us. And